ये पीपीटी आरबीआई की एनुअल रिपोर्ट फॉर द ईयर 2024-25 जो कि आरबीआई की वेबसाइट पर रिसेंटली पब्लिश हुई है उसमें से डाटा लेके बनाई गई है, जो कि टीम सीसीएमबी द्वारा प्रिपेयर्ड है। इस रिपोर्ट में जितना भी साइबर क्राइम जो कि इंडिया में होता है, जो बताया गया उसको हमने लिया है, और जितना भी बैंकिंग जैसे डिजिटल बैंकिंग, डिजिटल ट्रांजैक्शन, तो जैसे जो साइबर फ्रॉड होते हैं उसका जो भी डिटेल दिया गया उसको हमने इस पीपीटी में लिया है।
Good morning, everyone. I'm excited to welcome you to today's presentation. We will be exploring an expanded data-driven analysis on a very relevant topic. The focus is on cybercrime in India, specifically banking and digital frauds, based on the RBI Annual Report. This session is prepared by Team CCMB. Over the next few minutes, we'll delve into the key insights and trends highlighted in the report, helping us better understand the current landscape and challenges. Let's get started. As we look at this slide, the first point to highlight is how the rapid digitization of banking and payments has significantly expanded cyber risk exposure. With more transactions happening online, the opportunities for cyber threats have increased correspondingly. Next, we see that cyber and technology-driven frauds now make up the majority of total fraud cases. This shift underscores the importance of understanding and addressing these newer, more sophisticated threats. The increase in usage of UPI, mobile banking, cards, and fintech platforms is also a key factor here. While these innovations have made banking more convenient, they have also created new vulnerabilities that cybercriminals are eager to exploit. The Reserve Bank of India has identified cyber risk as a major threat to financial stability. This recognition stresses the need for enhanced security measures and vigilance across the sector. Finally, there is a growing need for real-time monitoring and increased customer awareness. As threats evolve rapidly, both banks and customers must stay alert and proactive to mitigate risks effectively. All these points tie into the overall theme of our presentation, emphasizing how digital growth, while beneficial, requires us to be more vigilant and prepared for emerging cyber risks. Let's take a closer look at the trend in fraud value during FY25. As you can see, there is a sharp spike in the amount involved in fraud cases. This indicates that while the number of fraud incidents may have decreased, the ones that do occur tend to be of much higher value. It's a shift towards fewer but more significant fraudulent activities. Most of these large-scale frauds are primarily linked to advances and cyber-enabled channels, which have become more prominent in recent times. This underscores the importance of strengthening our cybersecurity measures and monitoring high-value transactions more closely. Overall, this trend highlights the evolving nature of banking frauds, moving towards fewer but more impactful cases, and emphasizes the need for us to stay vigilant and adaptive to these changes in order to protect our financial ecosystem effectively. Digital payment frauds make up the majority of reported cases, which highlights how prevalent and concerning this issue is in our digital economy. The growth in these frauds is closely linked to popular payment methods like UPI, card-not-present transactions, and mobile banking. These methods have become so widely used that fraudsters are increasingly targeting them. Interestingly, while the average value per case tends to be relatively low, the sheer volume of these incidents is quite high. This means even small amounts can add up quickly when fraud is widespread. So, when we look at the overall picture, it's clear that digital payment frauds are a significant challenge, driven by the increase in digital transactions and the vulnerabilities associated with them. This underscores the importance of strengthening our security measures and awareness to protect consumers and the integrity of digital payments. Let's take a look at the overall trend in fraud cases within the banking system. As you can see, there's been a declining trend, which is encouraging. This improvement can be largely attributed to enhanced detection, reporting, and early warning systems that have been put in place over the recent years. These advancements help us identify and address potential fraud more quickly and effectively. However, it's important to recognize that despite this positive development, the risk associated with value concentration remains high. This means that even with fewer cases overall, the potential impact of those that do occur can be significant if they involve large sums or critical assets. So, while we're making progress in reducing fraud, we still need to stay vigilant about the concentration risk and ensure that our controls are robust enough to manage these high-value exposures. This balance is crucial as we continue to strengthen our defenses against financial crime. Let's take a closer look at the key statistics for FY 2024-25. The total fraud amount has reached an alarming 36,014 crore, which is nearly a threefold increase compared to previous years. Despite this surge in the total amount, the number of fraud cases has actually declined to around 23,953 cases. This suggests that while fewer cases are being reported, the ones that do occur tend to involve much larger sums. A significant point to note is that digital payment frauds now make up approximately 56.5% of all cases. This highlights how cyber risks are increasingly dominating the fraud landscape, especially as digital transactions become more prevalent. When we look at the sector-wise distribution, private sector banks report the highest number of fraud cases, indicating possibly more reporting or higher exposure in these institutions. However, in terms of the total amount lost, public sector banks bear the largest share, reflecting the severity of the larger, high-value frauds that target these banks. Most of these high-value frauds are related to loans and cyber-enabled activities. This underscores the importance of strengthening our digital security measures and scrutinizing lending practices more carefully. Overall, these statistics remind us that while fraud patterns are evolving, our focus must remain on both prevention and effective detection to protect our financial ecosystem. Now, let's talk about some of the major methods used in cybercrime. First, we have phishing emails, fake websites, and malicious links. These are designed to trick users into revealing sensitive information or downloading harmful software. They often look very convincing, making it crucial to stay vigilant when clicking on links or providing personal details online. Next, we see UPI frauds, which include collecting requests and QR code manipulation. Cybercriminals can send fake payment requests or alter QR codes to divert funds. Always double-check the authenticity of QR codes and payment requests before proceeding. Then there are debit and credit card frauds, especially in card-not-present transactions. These occur when someone uses your card details online without your physical card, often through data breaches or stolen information. Protecting your card details is essential to prevent these kinds of frauds. We also have SIM swap frauds and identity theft. In these cases, scammers take over your mobile number or steal your personal identity to access accounts or commit fraud. It's vital to secure your personal information and be cautious of any suspicious activity. Finally, social engineering, impersonation, and fake customer care scams are common tactics used to manipulate people into revealing confidential information. Scammers often impersonate trusted entities to gain your trust and trick you into sharing sensitive data. Overall, understanding these methods helps us recognize the threats and take steps to protect ourselves in the digital world. Staying alert and cautious is our best defense against these cybercrimes. Let's talk about accounts used to channel the proceeds of cyber fraud. These accounts are often opened using stolen or misused identities, which makes them quite tricky to detect. They serve as a crucial link in the money laundering process, allowing fraudsters to quickly layer transactions and transfer funds across different accounts. This rapid movement makes it harder for authorities to trace the illicit money. These accounts pose serious operational risks for banks, as they can disrupt normal banking operations. They also create compliance challenges, because they often involve violations of anti-money laundering regulations. Reputational risks are also significant, since being associated with such fraud can damage a bank's credibility. To combat this, the Reserve Bank of India has issued clear directives for banks to strengthen their Know Your Customer, or KYC, processes. They've also emphasized the importance of robust AML procedures and transaction monitoring systems. Now, a specific emerging threat related to these accounts is what we call mule accounts. These are accounts used by fraudsters to facilitate illegal activities. Recognizing and preventing the misuse of mule accounts is becoming increasingly vital in our overall effort to secure the financial system. Let's take a closer look at the impact of cybercrime. First, there's the significant financial losses that affect not just individual customers, but also banks and the broader economy. These breaches can lead to direct monetary damages and ripple effects that harm overall financial stability. Next, we see how trust in digital banking and payment systems can erode quickly once breaches occur. When customers feel their data or funds aren't secure, their confidence diminishes, which can ultimately undermine the adoption of digital solutions. We also have to consider the increased costs that come with dealing with cyber incidents, higher provisioning to cover potential losses, legal expenses from litigation, and recovery efforts to bring systems back online. All these add up rapidly. Furthermore, cybercrime has led to a rise in regulatory and compliance burdens. Financial institutions now face more stringent rules and requirements to demonstrate their security measures, which can be both costly and complex to implement. Finally, there's an ongoing need for continuous investment in cybersecurity infrastructure. As cyber threats evolve, so must our defenses. Staying ahead requires persistent effort and resources to protect our systems and maintain trust. Overall, these points highlight how cybercrime not only causes immediate financial harm, but also impacts the stability and trustworthiness of our digital financial ecosystem. Now, let's look at some of the key measures the RBI has implemented to curb cybercrime. First, there's a focus on strengthening IT governance and cybersecurity frameworks. This means enhancing the policies and systems that protect financial infrastructure from cyber threats. Next, they're leveraging advanced AI and ML-based systems for fraud detection and early warning. These intelligent tools can identify suspicious activities faster and more accurately, helping us prevent potential breaches before they happen. Real-time transaction monitoring and alerts are also crucial. They allow immediate detection of unusual transactions, so corrective actions can be taken swiftly. Improved authentication and access controls further tighten security, making it harder for unauthorized users to access sensitive information. Coordination with law enforcement agencies is another vital aspect, ensuring a quick response when cybercrimes are detected and facilitating better investigation and prosecution. Lastly, customer education and awareness initiatives are essential. They empower users to recognize and avoid cyber threats, making cybersecurity a shared responsibility. All these measures are interconnected and form a comprehensive approach to safeguarding our financial ecosystem. They reflect the RBI's proactive stance in creating a safer digital banking environment for everyone. Cybercrime has truly become the most significant risk we face in the digital banking era. Even though we've seen a decline in the number of cases, what's concerning is that the total value of frauds is actually on the rise. This means that while fewer incidents might be happening, the impact of each incident is becoming more costly and damaging. This highlights the urgent need for a multifaceted approach. Strong regulation is essential to set clear standards and hold bad actors accountable. Advanced technology, such as AI and machine learning, can help us detect and prevent fraud more effectively. Robust supervision ensures that banks and financial institutions are adhering to best practices, and customer awareness is crucial, empowering users to identify and avoid scams themselves. Ultimately, these combined efforts are vital to safeguarding our digital financial ecosystem. This theme of resilience and proactive defense underscores the importance of continuous innovation and vigilance in protecting both institutions and customers in this rapidly evolving landscape. Thank you so much for your time and attention today. I really appreciate your engagement and interest throughout this presentation. Remember, the key takeaways are all about how these concepts can make a real difference in your work and projects. I hope you found the information useful and inspiring. If you have any questions or want to discuss further, please don't hesitate to reach out. Thanks again for being such a great audience.